So what are futures? Futures are contracts to buy or sell assets for a fixed price today at a future date, hence the name futures. Now these contracts change in value with the movement of the underlying asset. Some futures call for a physical delivery, like commodities and bonds, while others are settled in cash, like equities. There are a vast assortment of futures products, equities, energies, agricultural products, metals, precious metals, and bonds. And most of the big futures contracts, which are the original futures contracts, are traded physically inside of a pit or a trading floor. The E-minis are the mini versions, and hence the name of the big contracts. They're broken down and split into smaller pieces, smaller increments, which allow for a lot more liquidity, a lot more participants, and a lot more action. Now we're going to specifically focus on E-minis in these videos, the equity futures E-minis, the index E-minis. But keep in mind that the methods and everything that we're doing in these videos are linear across all different futures vehicles. Now we're going to go over advanced patterns. These patterns are a bit more complicated than the basic patterns, but they can not only be played on their own with very strong premises, but when you combine them with the rifle charts, it makes them even more effective. Many of these patterns will seem familiar because they play off the offshoots, extensions, and combination of classic patterns that utilize the M, W, U, V, J structures. See, the market tries its hardest not to show transparency, so it may cause some of these patterns to get skewed a bit, but they may still fit, they may still carry the essence of the pattern, and they may still play out if the other parts or conditions of the pattern remain intact. So keep in mind that you want to try to train your eyes to spot these patterns. And the patterns shouldn't be too unfamiliar to you because, once again, they are based on components and pieces of the classic patterns that we've already reviewed in the earlier videos. Now, there are special events, volatility events that pretty much ensure that the futures are going to get some nice knee-jerk moves and possible trend moves based on material events like econ reports, FOMC meetings, ECB meetings. Okay, FOMC meetings, you get all the opportunities there. You get the reversion opportunities, the plan A reversions on the knee jerk, and then the plan A, B, and even a plan C type trade when the trends form. All right, and also bellwether earnings reports, big stocks that are big are highly weighted, heavily weighted on the indexes. Okay, they're going to move the index futures, or they're going to move the indexes, and the futures are going to move just as well. IBM, Apple, CAT, and so forth.